Hey everyone, welcome back. And today I'm going to do another price action review of today's price action, which was Thursday, October 3rd. I'm going to outline the trade I took on NASDAQ and walk you through kind of my logic and my execution. So let's start on the daily chart and take a look at how Wednesday printed. So coming into the session today, Thursday, October 3rd, we had the following understanding of price. First of all, we could see we were inside of a daily accumulation. We know we have NFP on Friday, and Thursday before NFP is not expected to give a significant range expansion, so we were expecting an accumulation first and foremost. Now, to choose a direction of the trade I took, what I did was I referred to the data offered by the Wednesday candle in addition to the previous days and how they traded to create a long thesis. So as you can see, on Monday, or Tuesday rather, we came into our sell-side liquidity on both the NASDAQ and the S&P. So this is our daily sell-side liquidity. Remember, inside of this daily sell-side liquidity, we are also in the context of a weekly fair value gap. So we can have this on our chart just as a reminder that we are in a weekly internal range of liquidity and we had purged a daily sell-side level of liquidity. So once we purge the sell side, you can see how Wednesday traded back up into the range after a key level SMT at the previous day low between NASDAQ and the ES. So this key level SMT, followed by a return back into the range, allowed me to frame longs for today, Thursday, targeting the previous day high. So I'll have that marked out on my chart. And on my daily chart, based on that perspective, I was looking for longs coming into the session, specifically targeting the previous day high. So now let's hop down to the lower time frames, our hourly charts, and see what structure was offered to us coming into the session. So on the 1 hour chart, we can see, let me fix this SMT divergence here on this 1 hour chart. So here was our Tuesday low divergence that Wednesday formed, and then you can see we came back into the range. Now on Thursday, as we approached the session, I was looking for longs into this area of liquidity, right? And I was trying to find an hourly context area to frame this expansion higher from to this previous day high. So as you can see, coming into the session, we had this London protraction lower. Now, every turtle soup in the market generally has an accompanying failure swing. So if we consider this SMT to be the long-term low of this price leg higher up into these highs up here, then we can see that we have an adjacent swing failure, which we can label, okay? Now, this adjacent swing failure digs into a premium of this wick, right? The consequent encroachment of this wick. Likewise, we see the same thing on the S&P with a swing failure, and then we dig into the consequent encroachment of this wick. So this order block that is being created, this down close candle, once we trade through it with this swing failure area here and this consequent encroachment of this wick, is a key level for me to look for longs to my objective point of interest, which is previous day high. So as you know, when I consider order blocks, the two areas I care most about are the open of the order block and the mean threshold. So I'll mark out both. We'll label this the mean threshold, and then we'll refine this area. We'll do the same thing on the ES. Get rid of this halfway point and this halfway point. Perfect. And we'll go down to a lower time frame like our minutes charts to refine this level. So as you can see, London protracts lower, right? Digging into this order block in here, or you can say this wick CE on that higher time frame, before eventually changing delivery state on the hourly higher, which is this blue line. And I had a key level that I was interested in observing price this morning. So if you look on my Twitter, I posted the entire live trade recap from this morning's session on my Twitter, so you can study kind of my thoughts and see how they were in real time and not just in hindsight. But I was considering this inversion array in here. inverse fair value gap of the market. So this is my key context area that I wanted to see if I could frame longs from. So as you can see, as price came into this mean threshold of this hourly order block and this inversion 15-minute fair value gap, I actually observed another SMT divergence. That shows that we are going from a state of manipulation or a phase of manipulation in the market to a phase of expansion, signified by, again, a higher time frame PD array, this mean threshold, this inversion, and this smart money divergence. So seeing this SMT divergence, which we had between the NASDAQ and the ES, right here, it's right here, sorry. I was looking to trade long, and I was looking to trade long to the previous day high on either the ES or the NASDAQ. In order to make the decision of which index I chose to long, I looked at the lower time frame structure once we started to displace out of this area. So as you can see, let me get rid of this just so it cleans up our chart a bit. As we started to displace higher, I noticed that if you pay attention to specifically the open and you compare the ES and the NASDAQ gave a much stronger impulse displacement higher, which also formed a change in the state of delivery above these consecutive candles, which led to this key level SMT. So that again is my order block. What I did was I went long in this order block, risking the rejection block low and targeting that previous day high. Now I also took partials, right, at this hourly internal range of liquidity here. This is a fair value gap, a CISD. So the position looked like this. Longs with partials coming off at the CISD, and then runners to that previous day high. So all in all, today was a fairly clean move in the morning for an expansion higher, and then as we expected, price returned back into the range and consolidated. We have non-farm payroll tomorrow, so that is the expectation that price will form a range. However, that's how I approach the AM session, utilizing the daily candle closures, right, for our bias, alongside of our higher time frame order flow, smart money technique, right, and change in the state of delivery to frame longs into this key level up in here. So let's keep that nice and short and sweet. If you have any questions, please put them in the comments below. I'll try and answer all of them, and I'll keep doing these daily recaps if you guys find them helpful. Okay, have a good weekend, everyone. I'll see you next week.